My next guest is the chairman of an oil and gas company focused on the Marcellus shale in West Virginia. Joining me now is Steve Lucado from TransEnergy. Welcome, Steve.
Thanks, Quinn. Glad to be here.
Tell us a little bit about TransEnergy and your current operational focus.
Sure. We're focused in West Virginia exclusively. We're really in 4 counties, which represent the core part of the Marcellus in West Virginia. Marshall and Wetzel counties, and Tyler and Marion. Predominantly a wet gas area.
And how many wells in the liquids-rich counties of Marshall and Wetzel, West Virginia, have you drilled, and what recent success have you been able to record?
With our joint venture partner, Republic Energy Ventures, who these are the guys who were former Mitchell Energy players in the Barnett. They really know drilling and fracking in this kind of environment. With them, we've drilled 18 wells so far. 10 of those have been drilled and completed in Marshall County. We've got 5 that have been drilled and completed in Wetzel. We've got another 3 that are awaiting frack in Marshall County. So we've had great success so far with the ones that have been turned down in Marshall County. Those are averaging just over 7.5 BCF per well, and we like to think of it in terms of our EUR per 1,000 foot of lateral, which is almost 1.7 BCF, which we feel is right up there with the other very good drillers in the area.
Do you have ample infrastructure in place to accommodate your current operational plans and existing production?
We do. We actually have had a long-standing agreement with what is now Williams Partners, now that they bought Cayman Energy for $2.5 billion, a fact which we feel really validates the market in that area of the Marcellus. With our joint venture partner, Republic, we've got 90 million cubic feet a day, and that primarily serves the area in Marshall and Wetzel County. We've got other midstream partners that are laying their laterals right now to join us over in Marion and possibly in Tyler County as well. So that should accommodate our near-term drilling plans, of which, frankly, we've got 54 well bores that can be drilled from existing pad sites that have been developed where we have existing wells. These are really what the SPE would call PUDs. So we feel good about those. We've got another 57 that are on pad sites that the average lateral length is over 3,000 feet. We've gone out there in the field and looked at these pad sites to know that topographically you can actually put a well there, which is pretty important in West Virginia. It's going either up or it's going down. There's not a lot of flat places, so you really need to know that in advance before you start picking drilling locations.
Now, other operators are targeting multiple producing zones in Appalachia. Is there additional upside for your company other than the Marcellus?
Well, yes. In addition to the well bores that I've already mentioned that we can drill today, and that totals 111, we believe in the Marcellus there's over 400 wells that we can drill ultimately. That doesn't include, of course, the Utica, which we believe most of our acreage is prospective for. That would be over 20,000 net acres to us, and there's 62,000 net acres for the Marcellus, gross acres, I'm sorry, for the Marcellus, including our JV partner, to give you a sense of the scale. There's also some interest in what they call the Upper Devonian in our area, and we've got over 20,000 acres of that as well, so a lot of upside potential.
Steve, what other insight would you like to share with us about TransEnergy?
We've got a well-funded JV partner in Republic. We look forward to continuing to prove out our existing acreage with them and then go on to the next step, which could be either a monetization of the assets or attracting future capital to drill them out.
Well, good luck with your project. It's been a pleasure to talk with you today.
Great. Thank you, Quinn.
Thank you. I'm Quinn Nguyen for oilandgas360.com.